minus 22%, minus 21%, minus 33%, minus 26%.
What is up, guys? Welcome back to the channel. My name is Kevin Svenson, and today is February 26th, Wednesday, and the crypto market is pretty bloody. Bitcoin touching just around $80,000. This is the hourly chart. A very swift move down for Bitcoin. Go to the 4-hour chart. We have been trending down virtually since the all-time high, January 19th, and that's when we touched right around 109,000. And now we're at 80. In just over a month, Bitcoin has seen about a 26% drop. Now, as you saw in the beginning of the video, Bitcoin has had corrections just like this throughout the run so far. Since the beginning of 2022, we've had several pullbacks, this one being 22%, this one 21%, this one 33%, and the current one 26%. It's in the realm of what is normal for Bitcoin since the beginning of 2023. It's not really outside of the ordinary. When you go to linear scale, it looks really intimidating, a big fat red weekly, but the characteristics of what we're seeing right now, I think look a little more like 2017, right? Because essentially when you look at the current trend for Bitcoin, 2023 to where we are now, we have these very distinct phases where we're running up, meeting the trend line, running up, meeting the trend line, and we're spending time creating these bases. In 2021, didn't quite do that. In 2020 or in 2017, we did do that. We had more of the behavior that we're seeing right now, but that's just a surface level observation. A lot of people are going to ask, Kev, what happened? Are we screwed? Is it over? The weekly RSI breakout failed so far. Bitcoin's hit 80K. Well, I said many times in past videos when we were looking at the parabola, parabolic trend was always positioned right around this point. I never had it set up here. I always gave it leeway. And I was always saying that, well, if we come back, we have a lot of room to play below. We could do anything in this zone and it would still be an exponential higher low. And if we compare Bitcoin's current weekly trend with the textbook diagram, is strikingly similar, even with this dip. All that matters is that you're getting exponential higher lows. A linear trend would be marking from this low to this next low. That's a straight trend line. What we have is an exponential trend. It is a parabola, even with this dip. So I just wanted to first establish that we are still maintaining the textbook diagram setup. As long as we have an exponential higher low, I know it's crazy, it's violent, it does not feel like we're going parabolic, but again, it's a weekly chart. The last base that we created was September, October of 2024. It took this long to form the next base. So it's a very, very long-term trend. This is pretty much the same amount of time that are in between these bases. From the first to the second, it's about 40 weeks. From the second base to the third, it's about 47 weeks. From the third base to where we are now, it's about 29 weeks, 30 weeks. And that makes sense because as you get higher in the trend, things become more exponential, a little bit quicker. And we're getting resolution on this base quicker than we did in the last one. The last time, I think it took us quite a while. We kind of went from March all the way into August to get that capitulation low. And I think that this is our capitulation low. Pretty confident in it. The way that the weekly looks, the way that it appears right now is not how it's going to appear most likely at the end of the week. It's Wednesday. We're halfway through the week. It could end up being a large wick, kind of just like what August looked like. If we look at the trading view chart, what I have mapped out here, you can see these two consolidation zones. The behavior from last year's consolidation to this year's is kind of similar. We hit a peak, we go sideways and down, 2024. Here we hit a peak and we hit another one sideways and down, lower lows. It's not the same, but it is definitely similar. If you look each of these zones, even that sideways range, 2023 in March, we stopped going up and went sideways into October. In March 2024, we stopped going up, went sideways into November. And then this year, or this bounce, we stopped going up in December. So the monthly timing, the yearly timing is a little different, but it's still similar behavior. And after the August capitulation low, that weekly closed above our lower weekly candle close zone. So we kind of snapped back up into the range. And so that was a pretty good vote of confidence from the bulls to close that weekly green. Because at one point, this weekly looked like this. It was just a giant red candle down. That's what it looked like at one point when it was at the wick low. But then the weekly closes higher. And so what we're looking for right now with the current weekly is that we get a nice close, that we close at least above our downward sloping support, right? At least we want to close above about 87,500. And if we can close above 90 roughly, right, the area that we had our most bounces, that would be a very, very good sign. If Bitcoin closes below this zone, it would signal that demand is weak. And then, of course, the next weekly after that would be very critical that we reclaim this zone right here. And if we don't do that, if we kind of just hang out below 90,000 for too long, it may signal that we're getting ready to break the parabolic trend, right? We haven't done that yet. Bitcoin has not broken the parabola just yet. We have some room. This is a very, very distinct, very clear trajectory, and Bitcoin is still maintaining it. So it's not the end of the world just yet. Bitcoin was really close to getting that weekly RSI breakout, that classic weekly RSI breakout signal that usually leads to major pumps. Whenever we would get the weekly RSI breakout, this would happen. These huge pumps would take place after getting the weekly RSI break. Even here, right before the election, huge move up. And this one failed so far, right? This one, we were really close. We closed like right on it. We closed on it and then huge dump. Unfortunately, it has failed thus far. Unless the weekly were to bounce really, really hard going into the end of the week, the RSI line could actually, look a lot different than it does now because we're still middle of the week. This is not a set, this RSI line is not fixed because the weekly has to close. If we closed and got like an August style wick in this zone, the weekly RSI could close at a much higher level. Hopefully it does, because every time we've had major support, such as this zone here, 2023, we bounced right around 45. And then here, when we had this major support in August, we bounced right around 45. We're currently at 48. So one thing that we definitely want to do is hold our weekly RSI support. I think if we're able to hold that 45 level, where we've had all of our major runs off of, then we might be able to see this turnaround, right? The market turn around and continue our trend. I think most likely, just based on cycle timing, where we are, the type of behavior that we're seeing, we're going to see something like what we saw in August with a rebound back up. We may hang out and sort of create a formation in this range before coming up again. So it might be, a lot of sideways action, a little bit of damage done to the market. So people are going to be skeptical, but I think ultimately we'll probably continue this trend up. Something that I find interesting is that Bitcoin's at lower lows, right? In the short term, longer term, lower lows. And if you look at the total 3, which is the altcoin market cap for the higher cap coins, including the higher cap coins, we're actually at a higher low in this zone. So there's a little bit of bullish divergence for the alts versus Bitcoin. They are not hitting lower lows from the February 3rd low. Bitcoin is hitting lower lows from a much lower low from that February 3rd low. And the others chart, the lower cap coins, are also testing this uptrend line, and they are also at a higher low, slightly higher low from the February 3rd low, bullish divergence against Bitcoin. That's how I see it. And the last time we were in this position for the others chart, which is all the lower cap coins, we had this downward sloping channel and we had a breakout. The flagpole length was exactly the size of the breakout, right? That was like a perfect target hit. And our current flagpole length, if you place it on the expected breakout zone, or you take that line, place it on the expected breakout zone, well, that would take us up to 730 billion. That's actually an interesting target because that's a new all-time high for the lower cap coins. But we'll see, right? I know a lot of people they don't want to hear this. They don't want to hear that Bitcoin's still in a parabola. They don't want to hear that the others chart is at support and has a setup that would bring us to new all-time highs. I know a lot of people are hurting, they're bearish, they're angry, they're upset, but I don't think it's really a great idea to become a full-blown bear during a capitulation moment in the market. Or I guess what I mean is like reacting to this move in a panic. Usually reacting in a panic doesn't have a good result. Usually you want to wait for a rebound. The market almost always provides some kind of rebound, and that usually makes you regret panicking on the low. You know, we'll see how this plays out. We're going to keep an eye on the parabola, and if it breaks down, it'll be pretty obvious if it breaks down. So that's how I'm seeing things overall right now. I hope you guys enjoyed this video. If you did, smash the like, subscribe to this channel, and be sure to sign up with Kraken Pro using that link below. And I'll see you guys in the next video.